What's up, everybody? Michael Silva here. We got ourselves a 95% probability that this is going to be happening. What am I talking about? I'm talking about Distribusaurus. No, that's just a distribution curve. That's what we're going to discuss on today's stock market brief as we look at the weekly expected moves and where the Qs are and where the SPYs are in relation to it. Now, today we did have a 2 standard deviation move on the daily time frames, and I'll show you that for the Qs at least. Now, we're coming into Friday, right? The 10th trading day of the week. And this is typically from a pre-election year seasonality standpoint is where we could find potential topping points. That doesn't mean it's going to be for sure, but we have been tracking this and it's been working quite well overall. Now, in yesterday's stock market brief, we talked about the megas, how they were inside of their expected moves, but a lot of other products were outside. So in order for the market to go up higher, we needed to see these names start to perform. And well, as you can see, as I flip it over, boom, we started seeing more come outside of their weekly expected moves. You can really see that here on the heat map. Google was up 4.36%, which that actually happened to be one of the trade ideas we posted yesterday. If you're in the Discord group, I'll share it really quick. I forgot I didn't add a slide for it, but I'll do it on the fly. You can see here, this was, I think, posted, yesterday at 6:33 a.m. And what we saw here on the weekly time frame was this price action was wedging into the 20 period moving average or 20 EMA, and it was still above the all-time high anchored VWAP, and we saw just a nice big move overall come from that today. So good stuff if you were able to join in on that fun. If we take a look at the 11 sectors that make up the S&P 500, the only one in the red today was energy, but you can see tech and XLC, they did step up their game, really helping the S&P 500 and the Qs overall. Now, what from a macro standpoint drove it? Well, we had PPI, it came in at 0.1%. The consensus was 0.2%. So we're seeing some lower inflation numbers there. And then we had initial jobless claims as well come in at 237, where consensus was 250. Now, what did that do for overall the rate hike? Well, we still have a 92% probability that the Fed is going to be raising this month. However, we did see some subtle changes on the September, where we saw a subtle decrease again in the percent probability of going another 25 basis point hike. And we saw a subtle increase here that we might see a 25 basis point rate cut. That's pretty much all to note there as far as that goes. What happened to the 10-year yield? The 10-year yield really took a nosedive today, and this rapid rate of change really does help out various growth sectors. Typically, when it rises at a rapid rate of change, it hurts it. When it falls, it helps it. But as you can see, as we've seen, this rapid rises right up to here didn't really do much to impact the overall markets. Perhaps this has some more room to go, or this breakout was potentially just a bull trap as we quickly shot up to 4.1%. You can see as far as the curve goes, the 10-year 3-month, as the 3-month is kind of just hold steady up here, that curve is getting deeper, inverted to 171 basis points, and then we're pretty much flat there at 83 basis points inverted in the 10 and 2. Another big mover was the dollar. This continues to kind of just sink off. A lot of people are calling for this to be the end of it. But remember, when you see these big sell-offs, you typically get reflexive bounces. And these type of moves are helping out, obviously, various assets, right? This goes down, the S&P 500 goes up. But take a look at oil. Oil is also coming into the 20-day moving average, 200-day moving average. This thing has also been bulling up like a rocket ship. And same with copper. Copper had this big sell-off, but these last couple of days where dollar got hit, we're seeing copper really rise there too. Now, this is the distribution curve. We're going to hop into the S&P 500 and the Qs before we sign off today. Now, remember, 1 standard deviation. So this is the daily expected move, weekly expected move levels we share. And there's a 68% chance that price is going to close within this. So for example, if the asset that we're talking about is at $100 and the expected move is +5, right? That means we can potentially come out here to 105 or potentially down here to 95, and we would say price, the market is implying that that's what the forward-looking risk is. Now, remember, that's only a 68% probability, which is above 50%, so it's good. But when you get to 2 standard deviations, there's a 95% probability. So if we take a look at what happened today on the Qs, today we did get outside, right, of the 2 sigma move, and you can see that's the daily expected move we went over yesterday. And look where we opened. We opened right here, and we came down, it touched it, it tagged it, and then we started breaking away from it. And this is what happens when you see dynamic hedging take place, where all of a sudden you're outside of what the market anticipated as far as a risk goes, and same with the weekly expected move. And then they have to hedge, right? More buying goes into more buying, and you can see a really push outside of it, hitting to the outside of the daily 2 sigma standard deviation move, which is even a smaller, probability of that actually taking place. And if we take a look now at the updated daily expected moves, we're looking at 382.31 to the upside, 375.99 to the downside. We still haven't tagged the low of this anchored view up, so that'd be one to watch. And that's right at the low of currently at the low of the daily expected move, which is 375. We're clearly outside of the weekly expected move. Now there's one other line on my screen right here, 379.88. Take a look there. That is the 2 standard deviation move. And look at how price came into that today. Boom, that's the weekly. And then we started selling off. So if we start getting outside of that, start looking at 382.31. If we're going to get that additional push, we have a negative divergence building there on the RSI. This is not moves that I'd necessarily chase. You'd want to look for pullbacks. Remember though, overall, we got above the quarter to day anchored VWAP. We said when we're above it, it's bullish. And you got to get above the 5-day moving average and have it start inclining. So we're bullish, but we're extended. So even if we fall all the way back into this to 370, that could still be a good opportunity to potentially play bounces back up and continue an uptrend. So overall, in very bullish context right now, although getting quite frothy. If we take a look at the SPY, we didn't hit a 2 standard deviation move on the daily expected move, but you can see we came up, we opened, came down a little bit, and then you can see how price just hugged it for a big bulk of the day in a very tight format. So this right here, there's not much trade opportunities, but if you break the range, right, and it was trading within the 15-minute range here, if you break the range to the upside, it could be very bullish. If you break it to the downside, it could get pretty bearish and potentially close the gap. Well, we broke above it, and we came up a little bit higher. Now, where did this price action stop at? Where did it get halted? Right here at 450.41, which is the 2 sigma move for the weekly expected move. Now going into tomorrow, 446 to the downside, 452 to the upside. That's the daily expected move. And even if we come down here, that would be closing outside of the weekly expected move. And remember, we're still above the quarter to date and the 5-day moving average, which is now inclining. So as long as this continues to incline and price comes down, maybe we even undercut it. We can maybe U-turn back up through it. It is in bullish context, so just be aware of that until we start breaking back down, right? How we broke down here and it starts to flatten out, came above, broke down. It told us to pause. And then if you got back above, right over here, above the quarter date and above the 5-day moving average, you're looking pretty good right now. We do have that negative divergence that's also building there as well. If you take a look at the pinned comments, I have some links there. I have this swing trader community. This is where I post my trade ideas like that Google trade. I can go back, you can look through the history of all my charts that I posted there. I do updates on my watch list. I have monthly expected moves, quarterly expected moves, weekly, daily zones. So I post all of those there on the Discord. If you sign up to Patreon, you got to sync Discord. I don't post on the Patreon platform. People can sometimes get confused about that. But it's only $9 a month, so it's not an arm and a leg, or you can even get it cheaper, pay $90, you get access for the entire year. This is not an alert service. That's not what I do. I provide charts and I show you things that are coiling up, tightening, and potentially can lead to good risk to reward opportunities. And then you get access to obviously the community. I have the zones there too. I got to update this actually because I do so much here for $9 a month. There's also a link to Interactive Brokers if you want to take a look at their platform. I'm actually moving all my stuff over to Interactive Brokers. That something happened with my Webull trading setup just the other day where they froze me out of a trade. I'm not going to even talk about it. I've been using them for a while and I've always liked them, but this one really irritated me what happened. But also what's cool here on Interactive Brokers, they have a campus. And if you click the campus button, it'll show you, they'll have courses, podcasts, webinars. Then they have some great articles that you can go over there too. That's all free. And then you can sign up for their light platform or even their more advanced platform, and they do global stuff. Just a good platform overall. And then the other one was Bookmap. I get discounts for the subscribers to Bookmap too. This is the software that allows you to visualize certain levels. Like for example, today this level lit up right here. It's been there all kind of day. This was earlier in the trading session, right at 4555 on ES, and there's 539 orders there. And this right here, these levels can act like magnets. And as you can see, we boom, 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 started coming up to that level. We're just about there, absorbing it, and we just right there, did absorb it. And you could see what happened right at that 4555 level. We started to actually act as resistance once that liquidity was filled. So just overall, just helpful trading software, good brokerage, and then obviously the community as well. That's all I got for you, everybody. Have a wonderful night, and I'll see you back here Friday or potentially a little bit later into the weekend. See you later.